Hey everyone, Intel reported quarterly results that sent the stock price down again following the announcement. So in this video, I'll review those latest numbers that disappointed stock market investors. I'll also update my buy recommendation for Intel stock. Of course, I've had Intel stock rated as a buy all year long, and it's been one of the more disappointing recommendations I've made. The stock price is down from over $50 a share to start the year down to $32 per share as of this recording. So have I had enough with Intel stock? Am I downgrading it? You're going to want to tune in to find out. So let's get right into it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, like I mentioned, Intel's stock price has disappointed in 2024 amid a broader semiconductor rally, which makes it look even worse because its competitors are soaring while its stock price is falling. Intel's been a disappointing stock for several years now, and I've had it rated as a buy because of its prospects, because of the expansion in semiconductor production and the government support for this technology, and Intel's proven capability in the area. Even though it hasn't been the best in class, it has proven it can participate in the industry, taking strong market share. And given the tailwind on the back of rising effectiveness of artificial intelligence, I was feeling like Intel had excellent prospects. So let's see the latest numbers. So revenue increased by 9% to 12.7 billion. Still, the company generated a loss of 9 cents per share. However, that loss was better than expected. The company's forecast is what really disappointed investors, telling them to expect second quarter revenue of 13 billion at the midpoint. That would only be slightly above the 12.7 billion in the first quarter. And then the second quarter EPS loss of 5 cents per share. Again, only a slight improvement from the 9 cents per share loss from the previous quarter. Now, Intel did say that the Intel 3 in high volume production, leading semiconductors, are being manufactured in the US for the first time in almost a decade, and we are on track to regain process leadership next year as we grow Intel Foundry. Now, Intel has lost the trust of investors who are not really optimistic that Intel is going to regain process leadership. They fell behind by not investing in the latest technology, and they're trying to play catch up, and investors are not confident that they're going to be able to catch up to industry leaders like Taiwan Semi and others. Now, management did say that they expect to deliver year-over-year revenue and non-GAAP EPS growth in 2024, including roughly 200 basis points of full-year gross profit margin improvement. While that's great, they're still so far behind. They're still negative in terms of operating profit margin. So investors are we're hoping for better progress, more rapid progress on this front. And that's not what we're getting. We're getting more incremental improvement in terms of gross profit margin of just 200 basis point improvement. So, of course, the name of the game right now is artificial intelligence and how Intel is positioning itself to benefit from this trend. It's arguably, well, not arguably anymore, the hottest investing trend for the last 2 years. And Intel saying that more than 5 million AI PCs have already shipped since December of 2023 and the launch of Intel Core Ultra processors. Intel expects to exceed its prior forecast of 40 million AI PCs by the end of 2024. So that's good news there, and more on the front of how highly in demand AI capability is from consumers and enterprises alike. So at Intel Vision, the company introduced their Intel Gaudi 3 AI accelerator, which is projected to deliver on average 50% faster inference and 40% greater inference power efficiency than the NVIDIA H100 on leading generative AI models. So if true, this could be a huge selling point for Intel and its Gaudi 3 AI accelerator in an attempt to gain some market share away from Nvidia, which is estimated to hold nearly 80% of the AI chip market share. Additionally, the next generation E-core Intel Xeon, codenamed Sierra Forest, achieved a product release date this week, and Intel expects the Granite Rapids to be released in the third quarter. So finally, after these billions in investments in research and development, Intel is coming to market with its next generation products, and investors are eagerly awaiting a boost in sales from these products. Already Intel, revenue jumping nearly 10%, so it's already demonstrating some solid revenue growth. Investors want to see more of that, especially because they're still generating losses on the bottom line, so that they need to demonstrate better revenue growth in order to achieve a scale that can generate profits on the bottom line. The cash outflow from operations improved, but it was still negative. So in the quarter that ended in March 30th, the company generated a loss from operations of 1.22 billion, better than the loss of 1.785 billion they generated in the same quarter the prior year. So that was a solid improvement, more than 20% improvement in the cash outflow from operations. However, that being said, I like where the company is spending their cash, adding to property, plant, and equipment, which is their manufacturing capability. They spent $7.4 billion in the same quarter last year in this category. They spent $5.97 billion in this category this year. This is where I want Intel to spend money on, to advance their manufacturing capacity and capability, both be able to produce more and to be able to produce better latest generation cutting edge technology, because this technology, what Intel produces and offers to the market, is very difficult to get up and running if you're a newer company. So it's up to the existing companies in the industry to increase capacity. So the competition from new entrants is not that threatening. It's the competition within existing market participants that's the challenge for Intel. And that is on technology first and foremost. Can Intel catch up with the latest generation technology? And investors are rightly pessimistic about Intel's prospects in that category in catching up. So they're already undervaluing the chances of Intel catching up to these leading edge companies in the category. That can partly explain why Intel stock price is down so much. Still, given that Intel stock price is down so much, it's trading at a relatively cheap valuation, a forward PE of 14.11 as of this recording. Now, there are risks with Intel, significant risks, given that it's a competitive industry. Billions of dollars need to be spent on capital projects just to keep up, and you got to keep up for several years into the future. This isn't an industry where you can spend $20 billion in one cycle and then, sit back and let those investments reap you rewards. You've got to keep innovating. You've got to keep investing to stay up with the game. And that's what makes it risky. And that's why I don't think it'll ever deserve premium valuations north of 25, 30, or 35. But I think at 14, I think it's a relatively good risk versus reward. And that's why I've had Intel stock rated as a buy all year long, as I noted earlier, and that recommendation has been one of my worst. It's down significantly on the year. Still, to reiterate this recommendation here, am I keeping it a buy or am I downgrading it? After reviewing the results, I'm keeping Intel stock rated as a buy. I think the prospects going forward are solid. I know it's risky, but the valuation, I feel, more than accounts for those risks. And so I feel the risk versus reward is worthwhile for Intel stock. It's not my favorite stock. As you can see, I have stocks rated better than Intel. But it is a stock that I think is a buy. Thank you for watching this video. I truly appreciate it. I know there's a lot you could be doing with your time and a lot of other videos you could be watching. So I truly appreciate that you chose to watch this one. If you want to see more videos just like this, hit the subscribe or the like button. They'll both help me make more videos just like this one. Thank you again.